Hello, I'm Tim Beggins, president of Elk Trading Company. In this, the top news for natural gas. Number one, weather forecast models for the U.S. have turned colder again, just in time for today's expiration of the January natural gas contract. Number two, European natural gas storage levels have fallen to 64% full. This is down 11% from the 5-year average, just in time for some very cold weather to come in. Number three, Russia is now the number two supplier of LNG to China, now taking Qatar at this stage, right behind Australia. And number four, the Ukraine and Russia negotiations continue to drag on. Let's turn to the January natural gas contract, which expires today. Currently, prices are trading at $4.50, up 13.4 cents, or a little bit over 3%. And as you can see here, the RSI is open to the upside, but today is expiration. So if you've got January positions, you need to roll or close them out. What else do we have going on? Well, we've got two storage reports this week, one today at noon Eastern time, and another one on Wednesday, also at noon Eastern time. Today's expectations for that storage report about minus 173, but for Wednesday about minus 50 because we had some very warm temperatures. So let's turn to the February contract here. And as you can see, this is the hourly chart. We are pushing above the daily pivot here, which comes in at 385.30. Currently, first resistance, 397.20. So we've tested that overnight. And as you can see, we're making another run for it. The RSI is open. So this says it's positive. Why? Because the colder weather forecasts are back on the market. And we'll see if this continues to pull February higher. So let's turn to the front to back spreads. And because of that cold weather, the front to back spread here for January 27 versus April 26, that's the injection spread, is coming in. As you can see, we got over 1505, but could not get to 155.60. So right now we are currently trading at 143.5, down just 6 ticks. And the RSI has turned to the downside. So we'll expect that this spread continues to compress. What about the April through October strip? Well, look at it. It's right now currently trading at 368, up 5.6 cents, or a little bit over 1.56%, and the RSI is turning higher. And this is exactly where the spread was this time last year, around 360, before it exploded back up almost as high as $4, came off, and then went out at 512 per MMBTU. So you got to be careful. This spread is reflective of colder weather. As we continue to get colder weather, we will draw down storage stocks. And like last year, we had 7 weeks where we drew down stocks. A total of 1.533 TCF was withdrawn over that 7-week period. And that was what boosted the April through October strip. Again, markets don't repeat, but they do rhyme. And looks like we're going to do something similar this year. So let's turn to the forecast models here. And as you can see, this is the GFS model, but the pattern change is noted here. This is all the way out on January 14th. And look, the East Coast, all the way back up to New York and Boston, is warmer. The colder air is now centered toward the western part of the country and the Great Lakes. And as you can see, this is also pushing down into Texas. This is the wind chill factor, so we'll keep a careful eye on it as it's pretty far out. And let's take a look at the wind chill factor this morning. It was quite cold in the upper Midwest, down into the minus 20s up in North Dakota, all the way down to minus 15 in Minnesota, and it looks like Chicago was barely above zero. So let's take a look at what else is going on, and that's the snow and ice cover. And as you can see, we've got plenty of snow across Canada. The ice is completely closed up Hudson Bay, which means that cold Arctic air can just skate over that body of water and head directly toward the mid-Atlantic states and New England. So let's turn to Europe. And as you can see, this is for January the 1st. We've got colder temperatures coming in. And as we noted before, storage stocks are at 64%, down 11% from last year. And take a look. There's the 5-year average. This is as of December 25th. We're about average here should be closer to 75% full. We're at 64 with colder weather now coming in. This means that the year on year could be as high as 500 BCF as we get through this month. And here's China and Japan and Korea's. And it looks like, again, that cold air is focused in on the Koreas and Japan, and of course, the capital city area of China, Beijing. And when colder weather comes in for Beijing, it takes all the Russian gas, as well as from Turkmenistan. And that means the southern area down here in Guangdong province, which is equivalent to about Texas, has to pull in more LNG just to cover their basic needs. So let's turn to the oil and gas E&P sector. These are stocks between $2 and $10 billion and have a high short float over 10%. And as you can see, CRK is up over 11% for the 1 week. This is Crescent Energy that's new to the list, and that's up 4%. And BRK, which is BKV, excuse me, up 3%. This is a driller in the Barnett Shale around Fort Worth. CNX, which is a driller up in Ohio, is down 2.63%. So again, for the expiration of the January contract, which occurs today, we're currently trading at 452, up 15.4 cents, or a little bit over 3.53%. Let us know your thoughts in the comment section below. Please hit that like and subscribe button. Thanks for listening. We'll see you soon.